I want to run through a few things and we'll go through it step by step. I'm going to share my screen and run through some things I'm working on. I think the headline for the episode is that I love people's decision making. And one of the key reasons that I even do this podcast is to ask people, how did you end up doing what you're doing and why? What are some of the things that I'm making decisions on? And therefore sharing that as I go through this process, it is a cool part of that. And I'm making decisions every day, obviously, as an economic participant in the world, like what works for me, where does my self-interest take me, and what do I need, what could I do better, where in our life do we need to improve things, and what do we do in our leisure time, what do we actually want? Everyone, every day, asking themselves a gazillion questions to get to the bottom of all of those things. And so the first place I'm going to start off, let me share my screen, is I made a difficult decision this week, but I'm glad that I did. And I'm going to share it, which is that I have decided not to invest in the Satlantis investment round that's happening. So shout out to Alex Fetsky and his team that are building that business. Without a doubt, something really, really, really interesting. But as it transpires, it's not for me right now. If you saw what I originally created about this business, like Alex came on the show, Geordie as well, to chat through what they're building. And I created this, 10 major questions you want to run through in order to consider making a investment decision in a startup. And I suggest you go back and listen to that episode if you're interested in what that framework actually is and what are some of the things that I look for when I might make an investment decision. But interestingly, I've come down to the conclusion that I won't. And I shared this with Alex a couple of days ago, and that's all fine, right? No hard feelings. If it's not for you right now, no big deal. He's going to crack on with what he's doing, and I can crack on with what I'm doing. The decision happened for a number of reasons, and it's quite interesting to share what they were, so you can see how I worked through it all. But I'd signed up with Timestamp, which is the crowdfunding platform that Alex is doing the round through for Satlantis, and provided all of the paperwork that was required and ran through the documentation that was in relation to the specific deal. So as an equity investment, there's all sorts of paperwork you have to consider when it comes to the agreement that you're entering into. And in this case, it's a simple agreement for future equity, so a SAFE with a valuation cap. And it's a common contract that's in place for startup businesses that is designed to help you not spend tons of time figuring out the specific legals of the deal, but actually, just crack on, get the money into the business and agree a rough price at what that should be done. Now, for whatever reason, the workflow or the process of Timestamp, I did all of that. And then I thought that I was just going to sit there and wait for the round to be completed and then wire my money afterwards. I never got prompted anything to say any different. It wasn't until I followed up with Alex that it turned out that that wasn't the correct situation to be in. And then Timestamp followed up, and actually I had to be put in touch with a custodian of theirs that they use in the US. There was a whole load more KYC and AML to do that I wasn't aware of in order to even be given the wire details to send my investment. And so what happened is a number of weeks passed by, and like anything, things change, and I changed. And what happened along the way was a couple of important things, but it's absolutely true. The answers to the 10 questions that I gave on that previous episode are still as they were, but I found myself spending more time really thinking about the process of return of capital versus return on capital. And in this instance, it's a very, very high risk investment. So it's going to be illiquid for an unknown period of time. The return profile is unknown. It's kind of a moonshot, essentially. So it's high risk. It's right out there on the speculative side of things. And basically some things that happened in my life that changed. I'm not sure I'm quite ready to actually make those kind of investments, even though I thought I would be at this stage of the cycle. So a number of years ago, I was like, okay, I'm going to load up on Bitcoin. That's the best long-term bet from a risk-reward perspective. It's the fastest horse in the race. At some stage, when that purchasing power increases by an amount that you're happy with, you might want to take some profit off the table and invest that into some Bitcoin startups. And now that I'm there, sitting on 5, 6x my money, Do I really want to do that? And this has been a very interesting test case. And I've fallen down on the side of, well, actually, right now, no. Now, do I believe that the combination of Nostr and AI and Bitcoin is an interesting area for an entrepreneur to be batting? 100% yes. Do I actually, and am I super impressed by the kind of investors that Alex has already brought to the table? Yes, absolutely. But I'm just going to go back here to an important question that I really thought about at the end of the last presentation. Was I just had some bonus considerations on top of the 10 questions. And one of the questions was, are you investing in lines or dots? And this is where it's really fun to get your thinking written down, as a reference point to go back to. And I've written here, lines equals founder, but financials equals dot. The concept of investing in lines, not dots, is a investment lens I picked up in my startup experience, a few years back. And it's this idea that if you meet the founding team of a business today, you can meet them, see who they are, judge the talent, judge the opportunity, judge the market, judge the price that they're trying to sell equity at. And that is like a basket of data points. And if you see them again in 6 months' time or 12 months' time, how much progress have they made? And you might go and meet 10, 20, 50 startup teams, and then all of them have made a certain amount of progress in 6, 12 months' time. And what you're really looking for is the team that's making the most progress. And they are the best bet in that instance or with that lens. And so I've seen Alex as a founder. He was involved in building a business called Amber in Australia, an exchange. And he's then obviously been a prolific writer. And I see him making progress personally, but the financials position of Satlantis specifically, this was my first look under the hood. It's like, okay, what is this business? What's going on? What are they going to build? And the truth is, there's not a huge amount of information there. It's a pre-revenue business, right? It's not that there's a product out there, but it's constantly changing, and there's lots and lots of work to do. And actually, Alex is writing a great newsletter which shows you some of the insights of what he's going through every day as a founder of the business. But the fact it was a financials dot, it's like, okay, well, how am I going to get my money back? And maybe that question is already too strict when it comes to this kind of risk. It's like you want to take, let's say from a portfolio allocation perspective, all right, I'm going to take 5% of my net wealth and I'm going to make some outrageous bets. If it all disappears, never mind. And what it turns out is I'm just not quite there yet. And you'll realize why when I get to the next piece of what I'm going to talk through in this episode. But sorry, Alex, this isn't for me right now. My personal situation's changed. And, maybe later down the line. So in 6 months' time, or in 12 months' time, he's talking about raising a Series A at, twice the valuation of today. Let's see if that actually happens. Let's see what traction's created. Let's see if there's an ability to get into that round later down the line. Maybe the Bitcoin price will run over the next 6 months and then it will drop back off again. And maybe the equity market for these businesses in 12 to 18 months' time, it might not be as strong as it is right now. You might be able to buy equity at a similar price to today. Who knows? A lot will depend on the progress the business makes. And by saying no today, I have the ability to now witness what happens over the next 6 to 12 months. The reason that my personal situation has changed is, again, for people that have followed along on my journey, but I don't own any physical real estate. And that was a big call we made, 3 years ago now. And what we've learned, I think it was July 2022 that we moved out of our place. So now 3 years, almost exactly, actually. You can't live in a Bitcoin. And so, dealing with tenancies, landlords, Airbnb, oh my gosh, so many things that we've learned. I've started eyeing up a property, or I started looking again at a property just recently. We're on a big trip through the US and Mexico, which has been amazing fun, don't get me wrong. But there are certain things that, like, you've got 3 young kids, you're on the road, and it's like, oh, it'd be nice to have our own place and know that we just didn't have to go somewhere. And so my thought process is maybe we should actually be buying some physical real estate. And the cool part is what I'm going to run through next, is a really interesting part of how the investment landscape is changing and how Bitcoin supercharges that. But, if I put money into Satlantis, well, that's potentially part of a deposit that I put into a house. capital is valuable for different things. We as a self-interested economic participant, like I touched on before, the world's your oyster, right? Where do you want to spend your money? It's up to you. And what you find valuable today is going to be different tomorrow. And it's unfortunate from a perspective of Alex, and I'm sorry for leading him on in this sense. Had the timestamp process been smoother, and had I understood what actually had to happen, I might well have already sent that money. But I didn't, and things changed. And good on him for saying, "Cool, no worries, let's move on." And obviously, I'll be cheering him on from the sidelines because I think it's a really, really cool process. Now, the next part I'm going to just run you through is, I, of course, posted a note about this, and it's this idea of like saying no as an investor is harder than saying yes sometimes. And the emotional side of me is like, yeah, backs Svetsky, go for it, go for it, go for it. But then when I started getting more rational about it, it's like, well, hang on, maybe I need the money for something different. And is this business actually going to get my money back? And those are some questions I found difficult to answer. Mike Hardcastle, shout out to Mike, came back with a cool story that I thought I'd mention. He said, I never had a problem. And we spoke in the past. He used to be a very active angel investor in the UK. And it actually, it stuck with me in a sense. He's like, yeah, my investing days are behind me. I'm just going to stack Bitcoin. It's like, well, that's worked so well for me right now. Why should I, that's someone that I could really learn from and respect. It's interesting. Why would you go and buy startup equities? And he's shared a story here where he was basically, he was hunting for investments. He had a startup that he was looking at, and he put them in a scenario in which he tested them essentially, where they needed a property to rent their office space. He could potentially go and buy some office space and then rent it back to the business in exchange for equity rather than actual cash investment. And he said, look, there's no price, there's no limit on the cost. And these guys come back and they say, let's meet in Covent Garden, and they take him to this absolutely epic 5-story building, and the asking price here was 25 million. And he's like, well, hang on a second, guys, in your business plan, what was your budget for rent, and what do you value your startup at? And it took him a while to get the answer, but their rent budget was 40K and their valuation was 1.5 million. And so he's like, well, why would I go and buy a 5-story building when that's the case? And they're like, oh, but it was no limit on the budget. And the fun part of this story, of course, is that he learned more about the founding team through that process than he ever would have done in a meeting, right? Because they weren't thinking about capital allocation in an efficient manner. It's like, yeah, just because he's an investor and just because he said there's no limit on the price, think about how they will be thinking. And why would someone go and give you the best possible office space in London if you had a budget of 40K? It doesn't make sense. Anyway, it's just one of those cool stories you come across an investor. You're like, that would be a useful way of testing a founding team. And so in summary, I'm still really playing around with this idea of early stage equity investing. And like, is it something I really want to do? And I'll get on to the next piece because it helps to hammer this home. Part of my research is, what's the opportunity cost? And the question here, so I asked Grok, what is the opportunity cost of buying a family home or owning Bitcoin over the next 5 years? And, side note, I've got an episode coming out with Keep Level on Monday where we talk through this. This episode will go out Friday. AI is just shifting things so rapidly. And it's happening in my little area of the world, which is investing. Like, I have run countless spreadsheets over the years, countless. I honestly, I couldn't even think how many it's been trying to figure out, is something a good idea or a bad idea? Researching, getting primary bits of data, looking at the business itself, or if it was a piece of real estate, whatever it was, I had a spreadsheet for it. And then suddenly it's like, hang on, I can write, a small sentence and then out comes all of this information. It's how do I say this? A piece of investment research that previously would have taken weeks is now achieved in seconds. Like, fuck me. This isn't like, 10 times fast. It's 100x. And what's cool is it shows its reasoning. And that's the particularly important thing here. And so obviously it's like, okay, you have a pot of capital today. what is the optimal allocation for you? It's not for the index. It's not for a pension fund. It's not for your grandma. It's specifically you. And in my case, we've made an excellent choice by backing Bitcoin in the way that we did over the last 5 years, in terms of financial returns, in terms of freedom, in terms of time. But this piece of the puzzle that hasn't been there is physical real estate. And so we are at the behest of landlords and at the behest of the short-term rental market. And at times that gets really frustrating. You don't control your own space. Now, without going down the whole rabbit hole of like, oh, well, hang on, Jake, if you own a property that's, in Australia, it's actually an IOU to the government that can, put a policeman outside your door at any time. And if you have leverage on it, then actually the bank really owns it. And yes, okay, property rights when it comes to physical real estate are definitely a more gray area than initially meets the eye. So that is a discussion for another time. But what Grok does here is lays out its assumptions. So, okay, here's the time frame you're going to make this investment over. What does the Australian housing market do in that time? 3 to 5% annually. Okay, what's the Bitcoin price today? What's its likely performance? And for example, it quotes Cathie Wood's ARK investment prediction of $1.5 million US by 2030. And it then is going to make an assumption on what is the capital allocation size. And it's saying, okay, well, the average house price in Australia is 800 grand. And then it talks about like maintenance costs and things like this. So, option number one is obviously buy the house. And it's like, well, okay, what would that actually look like? Well, 4% appreciation, which is the midpoint of 3 to 5%. Okay, well, your 800 grand would, in theory, compound into 973,000 by 2030. Okay, great. But don't forget, there's going to be some taxes. There's going to be some maintenance. There's going to be some transaction costs, et cetera, et cetera. So your 173 grand of profit, might actually be a margin of more like 50 grand by the time you've taken out all of those. I would call them, well, in the buying and selling sense of real estate, I'd call it a friction cost. This is more an OPEX in a way. It obviously can then make a slightly different scenario, which is if you buy the property with a mortgage and you put down a 20% payment. So you only put 160K worth of equity and you use a $640,000 loan. Maybe you get that at 6% and it spits out the answer for that. Now, there are some other benefits to mention. Number one, stability for your family. It knows who I am. It's quite crazy, right? I was asking questions previously in this thread about unschooling and where the best places to go are and where's nice and warm, blah, blah, blah. That's another story entirely. But it runs then through, what is the opportunity cost of this? And it's absolutely mega. Investing in Bitcoin, what's the bull case? What's the base case? And you're talking about, huge gains from here, right? 10x gains, 6x gains. And the OPEX is nothing. Essentially, that's because Bitcoin, you just sit in self-custody, which is, years ago, I was like, hang on, so you just have to put this stuff in self-custody and it just pumps away in the background. You don't have to look after it. You don't have any tenants. You don't have any broken showers. It's like, yes. It's like, whoa, that's crazy. And eventually it hits me with an opportunity cost. Yeah, okay, this is where the numbers are kind of extraordinary, right? If you own a home in cash, then the opportunity cost can be as high as $3.75 million. If you own the cash as a mortgage investment, so a leveraged investment, then the opportunity cost isn't as big. And yeah, it's like, wow, okay. So then give some recommendations. Stability, if that's important, obviously buy the house. Wealth maximization is a priority, then buy the Bitcoin. What I thought was the most interesting case here was the hybrid approach. It's like actually what you want to do is you want to put down a deposit for a home so you get some stability, take out a loan at a fixed rate, put the rest of that money, the 640 grand, into Bitcoin, which itself will pump, and you're then in a much, much better position. So the opportunity cost of buying a home is missing Bitcoin's potential 180% to 1,225% return. I mean, it's just so crazy, isn't it? But it provides stability. So I guess the point of telling this story is, okay, I was thinking about putting an allocation into a Bitcoin startup. It's completely illiquid for anywhere from The fastest return an early stage equity investment might be 3 years, but it's far more likely to be like 10, 12, 13 years. So completely illiquid that entire time with an unknown return profile because it's a very, very risky bet, but with a potentially huge payoff. So, okay, but hang on a second. When I make a startup investment, what I need to know is it has the potential to 10x. And if I'm going to make 10 bets, all 10 of them have to have the potential to 10x. So you're telling me that actually you could own Bitcoin, which has the potential to 10x, but is liquid that entire time in self-custody. It just reminds you that the risk reward of Bitcoin in self-custody is like nothing else we have ever had the ability to allocate into as investors. It's completely insane how it just shits on everything else. So you get startup-like returns, but for lower risk than owning real estate, in my mind. So it's like, wow, you've got to see something unbelievably special to put your money into that isn't Bitcoin. And in this case, a family home could well be that, but definitely leveraged. I think that's the cool thing that this helps to play out. It's like, okay, well, let's say you did have a pool of capital that was the $800,000 that this used as an example. Well, actually, you want to get as much debt as you can, keep the deposit, and then essentially that 800 grand grows into millions of dollars as a position overall. The 160K becomes 250K in real estate investment, and the 640K that is a loan, the equity position behind that turns into multi-million dollars worth of Bitcoin. That is an unbelievably good investment strategy, in my opinion. And I already lived that reality from just a pure Bitcoin play. But I think right now it feels really, really good to look at some kind of leveraged real estate investment to give my family a base from which to explore the world. We're still going to homeschool, so there's no specific requirement to, be near a school or whatever. But obviously, family is very important to us, and we are looking back in the area where, the nieces live and all that kind of stuff because my kids love hanging out with them. That's a story for another day. In summary, the use of AI in this decision-making process as an investor is a new tool that some people definitely are not using as effectively as they could be, including probably myself. I'm just playing around with it now. I had no idea it even had the capacity to do this kind of stuff until very recently. And it's like that's a very high level but thorough report that would have helped me make a decision 5 years ago that would have taken me weeks and weeks and weeks to actually create myself. I mean, it would have taken a long time, a lot longer than the 10 seconds it took me to type out the question. I'm going to caveat all that with an interesting note that I got again here from Mike Hardcastle. Shout out to Mike. I'd said, fuck me, Grok is impressive. In my little world of investing, I've run countless spreadsheets trying to figure something out. AI is absolutely upending the world of investing, and ROI in seconds, not weeks, with all the metrics, inputs, and reasoning right there. And Mike said, check the answers. If AI can't do something or doesn't know something, it'll lie. And he had a personal experience where he learned that. So, okay, so just, remember, Jake, when you're running through all these thoughts and ideas, like, make sure that you've actually proofed it. And I'll go back to this little table here. This is the real kicker. I mean, imagine you put 800 grand into Bitcoin today, and that turns into $10.6 million. I mean, fuck, that's nuts, right? With, as I already touched on, the risk, in my opinion, lower than owning physical real estate. Like, how many people in the world actually understand that risk reward? I don't think it's many, and that's why this is still such a big opportunity. Next, I want to just move on to something I read this morning, which my summary of this is it's a great tailwind for investment over the next 3 to 6 months. And so Pomp pumps out his letter every weekday, and I read it quite a lot actually. And the reason I like it is because I get information like what he shared here, which is basically that the US GDP numbers are way above what was forecast. So they were forecasted at 2.4% for Q2 of this year, and they've come in at 3%. And he's talking through basically the benefits of the tariffs and how the tariffs have had a big impact on imports that are down like 35% or something. But that's obviously pushed people to create internally, and it's just fired up the economy. So the cool thing here basically is that I still believe we're going to see a new Bitcoin all-time high set. It was for me initially August 2025, and I've pushed that back to more like late September, October, because the cycle feels like it's lengthening out a bit. And there's a close friend of mine who's a great technical analyst, and he's looking at the underlying data that helps him make decisions. And his opinion is that we're not quite there yet in terms of the process of this cycle. But I've seen nothing to tell me that the cycle experience is over or finished. Like, why would the cycles stop? I just don't see anything yet that's, this whole thing of like a super cycle. It's just, in my opinion, it's just bullshit. There are people out there pumping their own bags that want, whoever it might be to load up on whatever new Bitcoin treasury company is that's coming out. And yeah, some people are going to get wrecked the next 3 months. And just watch, what is the smart money doing? Are they starting to take money off the table? And again, that's why I'm kind of actually quite keen on potentially making a real estate allocation, because years ago, I set my target, got in the trade that was go long Bitcoin, but sit on it until your target timeline of August 2025. And we're now there. And so, yes, I've been distracted by a ton of other things, but I haven't actually gone and sold that position out. And I'm so proud of that, because it's so difficult to stay focused, to not get distracted by the shiny objects all around you. Satlantis is a great example of that in many ways. It's just keep your head down, focus on what you want to do, focus on what you want to create. You've made an excellent decision. Don't worry about what everyone else is up to. And I should caveat that again with, I'm actually obviously building this podcast, and every month I'm getting bills coming in that are part of the process of putting this content out there. And because we're at the very beginning, because I'm backing it myself and I'm going to own it myself, I don't have anyone else to answer for, but I'm investing in myself. And shout out to Michael and Pat, who are helping me on the back end, putting this all together. But of course, I want to pay them as well as I can possibly pay them, because they're really skilled and they back me up every single week, week in, week out, turning up and helping me create this thing. And at some point in the next kind of 3 to 6 months, I'm going to look at different ways to actually create revenue as a small media business. But in order to actually do that, I wanted to get out there and just start creating podcast episodes, pump it out, Jake, and get in the rhythm, get in the reps, and see where it takes you. And that's what this process is turning into. So yeah, shout out to Pomp, and thank you for highlighting this. It's very interesting. What does it mean when the US economy is absolutely pumping? Well, it means asset prices are going to start pumping. Now, one thing I do want to just catch on this is sponsored by Polkadot. I mean, God, the shit coins out there, it just drives me nuts when I see people that are willing and able to understand Bitcoin at an extraordinarily deep level, but then take funding from a crypto business that's printed its own token and knows full well that it's very, very, very difficult to justify any real world use case. I've not seen any evidence of that. And it's because if I was going to go and raise money from a crypto media business, we could get funding tomorrow if I was shitting someone's crypto token. Anyway, people have different levels of integrity, I guess, is the point here, or different interests for that matter. And I do fully believe in the idea of, do whatever you want. But that's my perhaps overly judgmental position on seeing that. Now, the last thing I want to run through in this episode is an incredible story that's unfolding right now around Samourai Wallet. Now, I confess I'm not following this super, super closely, but from where I'm sitting, it's a pretty interesting story. So first of all, Samourai Wallet was a CoinJoin product. And to my mind, what that means is, basically you can send Bitcoin to a CoinJoin service. It then mixes that Bitcoin up with tons of other Bitcoin and spits it back out the other side, such that the transaction is impossible to follow. So it's basically, it's like a Western when you see the cowboy with a twig scraping over his tracks so he can't be followed. Same concept, but with digital peer-to-peer money, Bitcoin. And what's so interesting about this is that they have been, the founders of this business, they've been tracked down, they've been put through a legal process, they've been heavily fined, and they've faced jail time, 3 to 5 years. It's like, whew, that's actually pretty savage. Well, in my mind, I was of the belief that software is free speech essentially, and so you are covered under that area of law. And so to see these guys get taken out by the legal system in the US, fined heavily, and put in jail for basically having a software product, it's like, whoa, that's pretty intense. Like, what can be so bad about that? And improving people's privacy online. So in some ways, it's like, obviously it's a deterrent, isn't it? They want people to know that if you go and try and build these type of privacy focused products, they're going to try and chase you because they quite like how things are, i.e. the surveillance financial system that exists. So it's pretty scary in some ways. Like, of course, that would put me off getting involved in coin joins, like for now at least. There were some other details in here that I did come across that I thought were quite interesting. And I'm afraid I forget. Yeah, I mean, they talk about it being a mixer, which is interesting. And basically they didn't have the correct licensing, and is it a money service business, and all this kind of jargon of like, what's the right way of saying it? Jargon. I don't want to be dismissive, but it seems to me that the system essentially has come after them and they want to make an example of them. It's like, look, guys, you go and build products that means that we can't properly surveil you financially, then we're going to put you in jail and we're going to fine you, which is not how I would like to see things, especially in a supposedly free market oriented place like the US. But yeah, equally, why can't I go and hide how I behave online? And I think that's where you come down to this fundamental discussion of privacy and secrecy. And I've never really been one for Monero, but I hear of people that are interested in privacy using Monero quite a lot. Again, not shilling it, don't own it, but people out there do. And it reminds me of the excellent book, Resistance Money, that Andrew Bailey wrote. And it's got a brilliant section just talking about how physical cash works. When I get given physical cash, I don't know who had it before the person that gave it to me. I don't have any personal details on who gave it to me. I don't know how old they are or what sex they are or what address they have or how much other money they've got. I just know that that's a $10 bill and I take it from them. So it's got what's called backward privacy. Like, I have no idea where it's been. And then when I go and spend that money, the person that I give it to has the same problem. And that becomes then forward privacy. So as the cash changes hands, the privacy of the buyer and the seller remains intact, and we don't have tons of private individual information on each other. And that's what, in some ways, a Samourai Wallet and any other coin join service is kind of doing. It's helping Bitcoin, the digitally native peer-to-peer cash, actually function as cash. So it's very frustrating to see this happen. And I'm so sorry to those two developers that have got wrapped up in this that face jail time, because what they're building is something that the world needs and something that the world should be encouraging to create. And it's only through the nefarious, long fingernails of the central bankers that can print their own money, pay for the police force, pay for the judicial system to hunt down their competition. Like, they do not want an algorithm that delivers value to people to send, receive, and store over time that is out of the control of the state and out of the control of them, specifically the central banks. Like, why would they want that? Of course they don't want that. So yeah, it's a sad story, and it would be a bloody tough time for those guys and their families. And I really, my heart goes out to them. But yeah, wow, interesting to watch. Like, the powers that be are not going to fuck around. And that's why a lot of people that are in the Bitcoin space will talk about OPSEC, operational security. Why do they like to be anonymous online? Well, very simple. It's a very good form of defense. If you don't really know who that person is because they've got a picture of a Japanese guy and some laser eyes coming out and a name you can, never find anywhere else except for on that one Twitter profile, then it makes them very difficult to attack because you don't know where they are. But gosh, it should be possible to transact digitally in a private manner. Like, come on, like, what are we playing at here? Anyway, I hope that gets resolved. Long story short, we need more of these things, not less. Anyway, I'll leave it there. I hope you think that's been an interesting journey. Always interested in hearing from you. So please do reach out, hi@jakewoodhouse.io, if you've got any questions or anyone you want me to interview. And look forward to the next one. Thank you so much for your time.